would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Here we are, charging headlong into a brand new week, folks. I hope you all had a great weekend. As always, if you'd like to get in contact with me, the best way to do that is through the website at therebelbroker.com. Click the contact link in the menu bar. Feel free to send along any ideas, suggestions, observations, or questions that you might have, and I'll be happy to take a look at them. Also, if you'd like to get yourself into the drawing for a $50 Amazon gift card, click the big red button at the top of the site titled Take the Survey to Support the Show. Give the same email address both times you're asked. Answer the handful of demographic-style questions, and you're in. We've already handed out, what is it, $250? $300 worth of stuff, worth of money. We do it about once a month. We will be doing it again this April. Congratulations to the folks who've already won, and good luck to those who are about to win. I suppose the first thing, I think this is going to be a running total. Last week, I made mention of just sort of my experience so far in terms of real estate agents reaching out to me regarding my property. For those of you who are new to the show, a few weeks ago, I went ahead and on Zillow put a value in for the make me move amount. My plan is to remodel my house. I've already got plans. The kitchen's all set to go. We're looking at mid to late May for the put it on the market date. And I thought, if someone were to offer me X amount of dollars before I do any of that work, then I would consider that. It would save me the trouble of going through and doing the work, given the amount I would save on commissions and other types of things, assuming a buyer were to directly contact me. It all worked out from a math standpoint. And as I mentioned last week, so far, I think I've had one or two relatively real people contact me, and the rest have all been real estate agents. And without exception, every single real estate agent has approached my proposition with a lie. The lie falls into one of two categories. Either I am an investor and I want to buy, or I have a buyer. And in every single case, those have been a lie. And what's interesting is, since the last time we talked, I've had two more agents reach out to me since Friday. And one of them is, this is the point where I start to wonder if I shouldn't just sort of create a wall of shame on the website. Because, this isn't one of those deals where I've sort of put out bait to catch real estate agents being bad, being liars, engaging in deceit. Wasn't my intent at all. My intent is what I told you a minute ago. But never underestimate the ability of these folks to really convince you that, wow, it's even worse than I thought. So as I said, 100% of them so far, still consistent. We're now up to 14, I think, grand total agents who've reached out to me because of what I put on Zillow. I want everyone to keep in mind, I don't make it a mystery that I'm a real estate broker. The very last paragraph of the description of my property up on Zillow is, by the way, I'm a real estate broker and I'm not interested in listing my property. So these are folks who are reaching out who haven't even read the description for the property. They simply see the address, they see make me move, and they look at that as an opportunity to get a listing. Um, I also mentioned last time that we had a few folks who I initially gave them the benefit of the doubt. They came out, we jumped through the hoops and discovered ultimately that what they really just wanted to do was to list the property. And the shocker over the weekend was, this is the folks who reached out to me over the weekend. One of the two. One of them was one I wasn't really familiar with. Another one is a huge name in the marketplace where I work, or where I live, and where I do most of my business. They're absolutely one of those folks who engage in a lot of the things I don't think are necessarily a good thing. They're all about volume. They're all about putting together a team, which translates to, your agent doesn't actually do your transaction. These other folks do the transaction. So there is no one person who always knows what's going on with your deal. And I suppose even that can be a debate about what's best for the client. I have absolutely very, I think, well-considered ideas of what is in the best interest of my clients. And a team is not one of them. In fact, a team to me spells the agent who gets replaced by automation, because you're really not providing anything that's specific to your transaction. You're basically a checklist. And that's automatable big time. So when they talk about how jobs are going to go away in different sectors, I think that's absolutely true. I think real estate's prime for that, particularly since the folks who tend to get the numbers going in a way that is so good for them, not necessarily for their clients, do things in such a cookie cutter way that could be automated. But that's another subject. I had these folks reach out. Again, their tack this time was, we have a buyer. Great. Fantastic. And I recognize the name. This is an agent or a team of agents who I have been on the other side of a transaction with before. Never been horribly impressed as someone on the other side. And I kind of regret it now. I kind of wish I had simply not mentioned that I was a broker. But the email I got was, we have an offer ready to be made on your property. And I replied with, sounds good. The make me move number did not take into account a commission. However, I think that's something we could probably come to some sort of an agreement on. But I finished it off with, the only thing you need to understand is this will not result in you getting a listing on my house. So that's how I ended it. Never heard back. So replied to their email within, an hour of them sending it. We're now 2 days beyond it and haven't heard anything back. So it's and the other one came and I gave basically the same response, and it blows my mind that right now I'm batting 1,000. 100% of the agents who've attempted to generate a lead through using this Zillow designation of my house have lied to me about their intent in terms of contacting me, in terms of what they want to do. And of course, the goal here is to always take any piece of information and turn it into, what can we learn from that? What should we be doing in our own lives in order to bring that information in? And I've already talked about that. We did a pretty good chunk of the show last week on this subject. So really I'm not going to spend this much time in the future on this, but I am going to keep a running tally because to be honest with you, I have the lowest expectations of real estate agents, maybe of anybody. And I am blown away that we're at this level where I'm seeing 1,000. And I guess what's really shocking is now there are agents who I have met in this equation. And it annoys the hell out of me. And I can't imagine. I can't imagine how people out in the world just trying to get through their day to day, who come across a time in their life when they need to buy or sell property, have to deal with this kind of crap. Anyway, okay, so we'll continue our running tally. I'm getting to the point now, though, where I'll be turning that off. I almost don't want to because I'll probably be far enough in where money has been spent in terms of getting the kitchen stuff done. So then that number would have to go up, right? And I had someone ask me, well, Robert, why didn't you just list it in the MLS? That is an excellent question. And there's a little bit more of a complicated answer to that. One is you don't want to, nothing looks more bizarre on the MLS than a property that gets listed and over the course of time goes up in price. You can always explain it in the description, but then that assumes someone is actually going to read that stuff. And the reality is you only get one chance to make that first impression. If I want to relist my property and have it be completely new so that it shows up as a brand new listing, it has to be off the market for a month. Now, I could have done that. I could have listed it at the what I was willing to settle for number plus whatever I would have calculated would be in there for the commissions, given it a month and seen if that worked. That would have been one way to go. To be honest, the house right now is in virtual disrepair as there's packing, there's boxing, and I still have 3 sons that I'm dealing with in the house. So right now I'm not just dealing with the modifications to the house. I'm also doing all the things I've told you to do in terms of doing a walkthrough of your home and getting it ready to be shown. Because remember, we sell our homes differently than we live in our homes. So I've been getting rid of different pieces of furniture, packing up tons of books, getting rid of lots of knickknacks. There's lots of things going on. So it didn't make practical sense to do a listing in that way. Now, if you had a home that was already looking good and ready to go and you were planning to do the same thing, if you wanted to come up with a strategy to do what I did, but list it for that month before you do the remodeling and then know that you'd be off the market for at least a month, absolutely. I think that'd be a very good strategy. My stuff just wasn't set up well enough in order for me to take advantage of that. Okay. Now, we've got a couple of interesting items for you today. A little bit of it is to give you updates on previous stories. Now, you'll remember that we did a story about Seattle passing new regulations relating to landlording, where you would be required to do this first come, first served sort of thing in terms of how you select your renters. I'm against that regulation, but I thought it was interesting to also note that Home Union put out an article stating that Seattle was ranked as the top real estate market in the nation. Some of the key things they provided here in terms of housing investments in Seattle. At 3.3%, the metro's year-over-year employment growth is projected to nearly double the national average of 1.7%. Single-family rental vacancy in Seattle is expected to drop by 80 basis points to 2.1%. Rents for Seattle's single-family residentials are anticipated to grow to $2,347 per month. That's up 5.5% from 2016. Prices for investment homes in Seattle ended third quarter 2016 at $419,950, with over 80% of investors choosing to use leverage, so not all cash. Excuse me. So at the same time that you're getting a lot of headlines about Seattle being this amazing investment opportunity, make sure to take into account what we've talked about before in terms of very unusual rules and regulations managing or attempting to influence how you manage your property and how you select your tenants. And also remember this, a topic we've talked about before. You protect your investment in an income property. In terms of protecting it, the number one thing is tenant selection. And if the state decides they get to come along and tell you who you can and can't pick, I think that's a bad thing. It'll be interesting to see how this pans out. This hasn't actually happened yet in Seattle, but it's on the dockets. So just keep that in mind. It's another reason why I'm not a huge fan of San Francisco, simply because the Board of Supervisors has proven their willingness to do some pretty amazing things in terms of really limiting what homeowners can do when they're renting their property. So something to keep in mind. Next, and we've talked about this before, in terms of what you tend to see when you have a market like what we're seeing right now. Now, this one comes to us from the Mercury News. The headline is, as a seller's market, Bay Area homes slip, but prices soar. And we sort of touched on this a little bit last week. Quote, declining Bay Area home sales last month made it the most sluggish February in 9 years. And that's saying a lot. If you can think back to what was going on 9 years ago, that's a pretty amazing statement. However, prices jumped sharply as buyers bid on a shrinking supply of single-family homes. Prices went up 11.4% higher across the 9-county region compared with the same month of the prior year, reaching a median home price of $675,000, the largest increase in more than a year. According to Andrew LePage from CoreLogic, quote, it's the first double-digit price gain since January of 2016 when the median went up 14%. So that's pretty amazing numbers. It continues to be a seller's market, and no matter what the inventory number is, right? We've had discussions about comparison to a year ago and month-to-month increases. Regardless of how it compares historically to other inventory periods, absolutely, we do not have enough inventory to meet demand. And I actually got an interesting email from someone today, and this is a fair point to bring up, that I keep talking about new home construction. Well, why not push more for sellers to sell their homes? And yeah, that's absolutely true. And we've talked on this show about some of the things involved in that and why, in theorizing why sellers aren't selling. We came down generally on the idea that a lot of it had to do with confidence. The sellers I've been seeing over the last couple of years are more than 90% leaving the area. The closest ones I had staying were folks moving to Sacramento, which is substantially cheaper than here. So I didn't have what I've had in years past, years before the downturn. We're not getting the folks who are doing that upgrade where they're moving to a bigger home. They're just holding on to the home they have. We're not seeing people who are seeing their incomes increase, perhaps moving to a little bit more of an upscale neighborhood or an upscale property. We're not seeing a lot of that. I'm not seeing as many people moving from one part of town to another part of town or staying within the general Bay Area. And that's something that was a relatively large chunk of my business, say in 2004, 2005, 2006. In those years, those were relatively common things. And I'm trying to think of the last person that I worked with who was selling locally and buying relatively locally. It's all been folks who are moving somewhere else where it's much cheaper to buy, with the one exception of that home that I've mentioned this one a ton of times simply because it's a way out there one. I had someone move from Hollister to San Jose simply because the commute was killing them. They were spending an hour and a half on the road each way, and they needed to cut that commute down. So that was one example of someone moving from a much more inexpensive market to a far more expensive market. But even in that circumstance, this was when prices hasn't gone up that much. So they actually got an amazing deal. In fact, if they wanted to sell their house that they bought through me a few years ago, they could make a pile of money because it was in South San Jose. That's in a neighborhood that's doing really well. But that's another story. All right. So just more data backing up this idea that inventory is a problem, and the only thing we can directly change, right? I can't change a seller's confidence level. I can't change a seller who having gone through the downturn may be gun shy about not just selling, but then having to become a buyer in the same marketplace where prices are seen as going crazy. So the only place where you can affect it, the only place where you can provide an incentive, because I can't create confidence on the part of sellers, is to let buyers get in there and do their thing. And also, the other side of that coin is we haven't seen builders building at levels that are typical. Even if you remove the crazy time from the year 2000 up to 2006, it's nowhere near even what it was when we didn't have the crazy build up to the crash. So that's one reason why I think I emphasize that. I answered that question via email to that gentleman, but I thought it was a good idea to reach out to everyone else at the same time. All right, folks, we'll be back in just a minute after a quick break, so don't go away. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We've done sort of a look back. We talked first about the continuing phenomenon of every realtor who contacts me about my house is lying to me when they initially contact me. We moved on to some articles we've talked about over the last couple of months with some updates and interesting side notes that relate to them that might help inform your decisions if you're thinking about messing around in those markets. And we got a little bit more data that underpins this idea that inventory is really our problem and should be where our efforts are spent, not so much in creating more buyers. Now, one other thing we wanted to cover today, and something else that is a topic we've discussed before, is some of the headline. It's what's really funny is everyone has wanted to figure out what the millennials are going to do, primarily because they represent a nice big chunk of the marketplace. But there've been all of these headline stories, right? We've been told that this was a completely different buyer, that there were ways the market had to adjust to the millennial buyer. And what were some of those amazing things we were supposed to adjust to? First, I think one of the first things we heard was the micro house, these super teeny little houses, which when you actually get down and dirty and start looking at it is statistically insignificant in terms of folks doing it. And when you actually look at it and discover the number of folks doing it that are millennials, you discover that, they're not driving that as much as people think. I tended to see a lot of Gen Xers or baby boomers who are doing that and doing it as a second home. So that's kind of pooped out, right? Well, here's another one. The other thing that we were being told was that everybody really wanted to live in this more downtown type of place, right? Well, absolutely not happening here. And I pointed this out myself. In my personal experience, I've dealt with quite a few millennials over the last couple of years, and I am not seeing any of them expressing any of these supposedly millennial focused desires. And in fact, what's the big trend we're seeing now? The growth of the suburbs. The suburbs saw a 10-year pause, according to this article from Housing Wire. And of course, as always, all the articles I refer to in today's show will be in the show notes. So if you want to head on over to therebelbroker.com, you can see that there's the player where you can play all of the latest shows. And then directly below it, in chronological order, are listings for the shows where you have a player where you can play that specific episode. But then there's also the show notes, including links to the articles that are discussed in that show. So just so everyone's aware of that. And now, what's interesting is that they talk about this being about fleeing high prices. Okay, kinda, but not. If it was just about that, you'd be seeing folks wanting maybe the suburbs, but still relatively smaller properties. Not what we're seeing. I'm seeing the same sort of desire. I'm still seeing 3-bedroom, 2-bath, relatively decent-sized backyard. All of the stuff that is typical. I'm not having to adjust the searches. I'm still seeing the same desires in terms of what they want entered in that MLS search to find a property. New Census Bureau population estimates for the year ending on July 1st show central counties of metro areas grew by 0.7%, while outlying counties grew by 1%, according to the article. And this was published by the Wall Street Journal originally. And it's also being motivated, I think, by what we've talked about, the mushroom effect, where you get here's the other thing. This is also not a millennial thing. This is just a people thing. regardless of what age group they fall into, as long as they're in an age group, or as long as they're an individual looking to buy a property, if they are looking in a certain area and realize that prices are insane and that they are competing with 10 other people for every home they make an offer on, and they realize that if they go 15 minutes south, they can find an area that has less competition and more homes on the market at a lower price, well, that starts to become an enticing option after you've put in 4 offers and failed to get them. So all of these things that we've been pushed as headline things that we're supposed to be convinced are what millennials want and what this broader bunch of folks out there looking to buy want, it ends up all being baloney. We end up discovering that, these are still the core things that folks are looking for out of a home. The whole micro home thing, I think, sounds real good. I think there's a lot of folks who love the idea. But what's funny is all the folks who I see promoting it, like, for instance, I've spoken to a few places that manufacture the micro home. None of those people live in a micro home. None of the folks I've talked to who make, sell, market, promote, or discuss micro homes live in one. So that should tell you something, it seems to me. So let's at least acknowledge that at their core, there are things that folks want that really transcend what age group you happen to be in. And it's kind of encouraging to see things sort of coming back to center in terms of the press not pushing this thing, but we'll see where they go with that. But as always, I'll keep an eye on these types of things and try to point out when I think they're making some bizarre conclusions. Now, finally on today's show, I wanted to give you a little bit more detail on lumber prices. One reason why I bring up lumber prices, not a sexy number, not something that's going to get everyone going into party time, but it is a leading indicator, right? When more lumber gets sold, that means more people are consuming it, and they're typically consuming it to build homes. Now, in the past, we've had issues because China was consuming an awful lot of lumber, and of course, that doesn't mean anything to us. We had declines in 2015, which was related to China ramping down, and a lot of other folks who analyze this data or integrate this data into their expectations was saying it was a horrible thing for the United States in terms of our building. Well, no, it wasn't. It was a bad thing for our lumber industry because there was less demand for it, but that didn't mean there was a decline and that was being built in the United States. In fact, at the same time, a lot of folks were saying we're going to see lower building in the United States because of that. We were paying more attention to the real numbers here. We pointed out that China's orders went through the floor, and we actually saw sustained or increased consumption of lumber by builders in that 2015 timeframe, but it was to build multifamily. So it was to build apartments, and we talked about that. What's interesting now is we have seen an increase. Let's see. Right now, Random Lengths prices are up 26% from a year ago, and futures are up by about 33% over the year. Everything I've seen indicates that's not because of an increase in China orders or overseas orders. That's all domestic. So a couple of weeks ago, we talked about architectural billings were up. Now we're talking, and we generally knew that lumber numbers were up, but now we know what the numbers actually are. And sure enough, that tends to indicate good news relating to what's going to happen in construction. And we've also noticed that there seems to be more of a shift from multifamily or apartment construction to single-family residential. All we can do is hope that this is going to be growth in what's available and that we see it being a well-distributed growth, not just folks who want to spend at the super high end, but also folks who want to try and purchase that entry-level home. And the encouraging thing that we talked about last week was we are seeing more communities being built now, or more homes in different communities being built now that do tend to fit the bill of at least coming in at average, or in a couple of cases, just below average price for some communities. So I think that's good news because it's a complete shift from what we saw last year, where every single property for sale that was a new construction was at least 10 to 15% above average price for the community that it was in. So a good trend. All right, folks. Hopefully you're walking away with a lot more value than the time you spent listening to today's show. That's always the goal, to give you more out than you put in. Thanks for listening, and I'll talk to y'all next time.